Hi, I'm Laurence Parker-Brown. Welcome to the Inside Network. Welcome to this INDepth for the Inside Network. Joining us today to look at opportunities in healthcare property is Director and Head of Healthcare Property at Barwon Investment Partners, Tom Patrick.
Thank you for having me.
So let's look at the structural tailwinds that underpin investing in healthcare property. Why are they so prevalent? Why are they so strong?
Well, I think the first thing to answer there is the segment that we're investing in is very, very large, right? Healthcare is 11% of Australia's GDP. We're spending in the order of $225 billion a year. And it's a growth segment, right? As you quite rightly point out. There's a couple of big tailwinds that we think will continue to drive that. But it's interesting because most people think healthcare, they think, well, it's going to be defensive in nature, and that's absolutely true. But those growth thematics subsist. We've seen them there for the last 10 years. They've been pretty consistent. What are they, as you've asked? Well, we have a growing population, right? So we're a country of net migration positive. Every new person that turns up in Australia has access to and requires healthcare. That's a good thing. We're an aging population, right? So there's a very interesting part of our demographic, a cohort there known as the baby boomers. They're all pushing up towards 65 plus. And we know statistically that the average Australian who will see their GP 4 or 5 times a year under the age of 65, once they get over 65, that number doubles. And for hospital admissions, it's 4 times higher again. So really interesting thing there that we think will be a strong driver of growth is that aging cohort of our demographic. And then just lastly around technologies mainly. And I'm not talking about, apps on your phone or anything like that, but, quite simply over the last 20 years, we've made great advancements in pharmaceuticals, we've made great advancements in diagnostics. We're just better able to identify health within our population and treat it. And that's a good thing. We're getting good care outcomes, but there are consequences to that. Back in the day, you had heart disease. That was the end of you. Now you're an at-risk heart patient. You're being treated by 4 or 5 practitioners. And all of those things, will continue to drive demand for healthcare services, we think.
A hot topic at the moment is the performance of property across the board. What is it that you think sets apart the healthcare space as opposed to any other commercial property?
Good question. The number of factors at the asset level, putting aside everything that I've just mentioned now, we think the segment in and of itself is a very strong part of our economy, a good place to be investing. The characteristics of the assets are different. Some of the features that we see that are different from some of the other sectors, just basic lease tenure. Mm-hmm. We get much longer leases in healthcare, often 15, 25, even up to 50-year leases. We have very low incentives. So we're not paying away large amounts to tenants to attract them to come. Very low vacancy rates and very low default rates. Don't forget 70% of the health economy is funded by our state or federal governments. That means 70% of our tenants are receiving that income directly from our governments.
And another point that's quite interesting is you referenced those tailwinds. They seem to have been in place for a long time. What makes the current vintage of particular interest, the assets you're looking at now?
Yeah, well, you're right. I think those tailwinds have been in place for a long time, and I think there have been investors such as Barwon and others that have been the beneficiary of those for the last, say, decade. We've been investing now for 10 years. But I think the current vintage is very interesting insofar as we have had a softening in cap rates across commercial property. In healthcare, we've come off about 85 basis points, and we think that compares nicely to office and retail, particularly that have moved even further south. So I think for investors looking at the segment now, you've got a really good buying opportunity. The market was tightly held. Cap rates were firming considerably through the last cycle. They've softened off a little bit now. So we've got a unique window to be able to access, good pricing. And then I just think there's going to be the ability for landlords through this next cycle as well, especially given where construction costs have gone to be able to drive some rent growth, a little bit of alpha through their asset management teams into their portfolio. So those are two of the things. The last one I think is an interesting characteristic that we expect anyhow is a bit of a systemic shift in appetite from institutional investors, right? Away from office, away from retail. And they're all talking now about these alternative real estate sectors. Healthcare and life sciences, industrial still popular, the living sector and data centers we think will be areas that will feature quite strongly in institutional portfolios. And as an owner of these assets already, our portfolios will be the beneficiary of that increased appetite through the cycle.
So you touched on the pricing. That's always an interesting, investors looking to secure an asset at the right price. How do you work with the team to make sure that, this is an inherently illiquid investment, but how do you work towards being marked to market as much as you can be?
Yeah, well, I think you're right. Real estate is an imperfect market. We do rely heavily on working with our valuers. That's probably the key to it, is making sure that we've got independent valuation and oversight into that. It's about being active. It's about doing that as much as possible. We know APRA, is asking that of the superannuation funds in Australia. They're some of our key clients, so we're gonna want to hear that. And I think the Australian market needs to perhaps take a few of the leaves out of the books of markets like the UK, where quarterly valuations and things like this are par for the course. So I think it's about being active and transparent with your valuation process. As simple as that.
And Tom, as an advisor watching this, given that the structural tailwinds are pretty prevalent and a lot of people can invest into this space, doesn't mean that every investment will thrive and succeed. So how do you think about the key to success in healthcare property? Perhaps, across things like team composition and how you think about, leveraging different areas of expertise. What do you see as the reason for, outperformance?
Well, anyone can buy a commercial property. We'll start there. I think to do it well, you need to then manage it and own it for a long period of time. And then sell it well also. I think the most value in any commercial property transaction is created at the acquisition. So you've got to have a team of people that have experience in the diligence of the asset. In healthcare property, it's really important that you understand what's going on at the tenant level. They are different and they act differently to other commercial properties. The nuances of, what's a good one versus what's a bad one are particular. And, my team of 25 now have spent nearly a decade getting that right. So I think if you're going about it yourself, you need to make sure you're getting good advice. If you're going with a manager, it's about making sure that you're working with somebody who's got a good team, they've been doing it for a long time, with a good network. And then through the management process, it's really about engaging with those tenants and that sector, in a deep and meaningful way.
Thanks for all your insights, Tom.